Hey, welcome to today's video. I hope you are good. Now, if you're new to the channel, hit that subscribe button and press that bell button. We're going to talk today about a report that indicates that Bitcoin is undervalued. So let's get into it. Hey guys, welcome. Obviously, hit the links below if you want to learn more about cryptocurrency as well. I do a lot about crypto. I got courses, links, a lot of free stuff as well. So do check it out. And I want to talk about this mega trend, digitalization. Oh my god, I can't speak. There, we're good. Now, put my teeth back in. Is Bitcoin outshining gold? This is a really good report. I'm not going to be boring and just read it word for word because I will lose my tongue because I'm terrible at reading. Now, this goes on about the stock to flow approach, basically indicating that, you know, with how many Bitcoin supply we've got and the new supply coming, mined coins, minted coins. So you got stock and you got flow. It indicates that a lot of things are quite interesting with Bitcoin, with the approach that Satoshi took, with the difficulty adjustment, the scarcity, the amount of coins are made, how many coins are actually lost, and most importantly, the difficulty adjustment. Why does it matter, and all kinds of good stuff. Now, Bitcoin, gold, I'm not a financial advisor, but I would say you should invest in both. Why? Because they're both hard assets. They're both, you know, they're both interesting. They're both going to go up in price due to the fact of what is possibly going to happen in the next few years, a recession. Not financial advice, but the market is going to come down, okay? Now, with this, link below to this report. It's absolutely brilliant, okay? When you read it, when you look at it, and there's also recommendations to other things as well in here. So I want to go through a few little things and point out a few little things you need to look at. Now, it talks about silver. Always interesting to look at silver. But most importantly, we've got this bit. Check out this book, The Bitcoin Standard. Read it. Or if you've got an audio kind of subscription with Audible, whatever, get it in the car and just listen to it. Honestly, your mind will be blowing. Now, I honestly believe, if I want to be honest with you, not enough people know much about Bitcoin in terms of how it works as an asset. Simple as that. People are too caught up with, 10-minute block sizes. I can't buy a Costa with that. Doesn't matter. Ultimately, it doesn't matter. It's there to be a store of value. You don't go and take a gold block out of the bloody bank and give it to someone on the counter. It's just not the same. So, the stock to flow approach. It's all mentioned in this book. This is in line with the basic idea behind Bitcoin, which is explicitly designed as a monetary good and geared as a precious metal forms of money. New Bitcoins cannot be mined indiscriminately. At the same time, Bitcoin is purely digital and is therefore referred to as digital gold. Simple as that, right? So you need to listen and read through that book. It's brilliant. Now, the stock to flow approach is also used to analyze Bitcoin. Satoshi could determine Bitcoin's degree of hardness at will, which is kind of interesting. So you got to look at the unfair supply engineering in the case of Bitcoin. Now, this is kind of interesting. Satoshi cheated in which his white paper, because he specified, I can't even read, man. I need to go back to reading school. Such a drastic and abrupt decline in supply growth. That's because the halving happens every 4 years. Basically, it like a decoupling. So if you look at this, supply from the price in the mining efforts, in such case, computing power of Bitcoin. It's worth noting that the difficulty adjustment was absent in the case of all Bitcoin's predecessors, for example, BitGold, okay? Every 10 minutes, 12.5 Bitcoins fly out the miners, okay, as a reward, game theory and all that good stuff. It's going to halve again in May, April, coming up very, very soon. It's going to go to 6.25. That would indicate that there's going to be less and less coming into the market, and there's also going to be quite a lot up for grabs that are still being traded, and that supply and demand will obviously increase over time when the network grows. We've got to remember one thing here. Bitcoin has only been around for 10 years, give or take. Most people only really know about it. When you look at gold, that's been done over a period of like millenniums. It's been over a long blooming time. Crazy amount of years. And that problem is people have that lack of patience when it comes to Bitcoin. But I do think it's majorly undervalued when you compare it to gold. I do. I've always said it. I've said it for a long, long time. If you buy Bitcoin now, not right now, but wait for it to come down a little bit, and you hold it for a long time and you understand what you've actually blooming bought, i.e. check the links below and get in the Understanding Crypto course, you will know that it's an asset that's going to grow over time. I'm going to explain why. So this, honestly, just read this article, read this report. It's freaking unbelievable. But because it goes so deep in terms of the model of scarcity, it goes into the stock flow and obviously the supply and demand and the scarcity of a digital asset. It doesn't matter if you can't pay for things with it. It's there to hold as a monetary wealth, monetary system of wealth, store of value in a digital asset. How big is that realistically? Oh, I want to buy some gold. Okay, cool. You can buy gold. This is how you do it. Cool. Yeah. But Bitcoin would be easier to buy in reality when you think about it. When you think about all the hoops you've got to jump through to get gold, all the the measures you've got to take for insuring it to get it all kinds of ready. Don't have to insure it Bitcoin. Obviously, you've got to be very, very careful. Buy your private key. Not buy your private key. Buy a ledger with private keys encrypted, obviously. But, you know, a lot of people don't understand. So there is a strong correlation between Bitcoin market value and stock flow ratio. So model value with scarcity. You know, scarcity is huge. We know there's only going to be so many of these digital assets around. We know that. And this is a really good, interesting graph that shows the hardness of it and obviously gold. You got to look at gold here and Bitcoin. We're not that far. You know, in reality, the stock flow, it's pretty interesting when you consider it. So, in terms of like prices and price predictions, Bitcoin is poised or whatever, to take a big leap forward in 2020. That's obviously because of halving and a lot of interest in it. And we've obviously got new systems out. Backed is out. Yeah, it's there though. It's not gone to the moon, but it's there. A lot more since I've came in the market, a long time ago now, almost 4 years ago, a lot's changed. A lot has changed. It's unbelievable when you think about it. Yes, there's people that are really, really out of the loop with Bitcoin because they're too busy jumping on other coins. But ultimately, this is the way of wealth. You should be trading your digital assets for more Bitcoin. You should be doing it in the BTC pair. Simple as that. Don't be buying in USD. Why? What's the point? Pointless. Useless. Look at this. Now, the most intriguing question, of course, is what the future will bring. What is certain is that Bitcoin stock to flow ratio will increase drastically in May 2020, halving. So basically we'll go from 25.8 at the moment to almost 53. Basically just dump, massively jump. So by contrast, gold stock to ratio currently in the vicinity of 58. So basically that chart there, Bitcoin is currently here. We're going to go. So, valuation wise, it should fly up with it. So, that would indicate 90,000. That's crazy. It's crazy. Is it possible though? Anything's possible with Bitcoin. But what I do want to say about this video, certainly this video, this report, obviously we can't read too much into the future, but due to the model of predicting hardness of an asset, it's always interesting to look at. So obviously check it out. But these are obviously just forecasts, and if it is going to be a harder asset than gold because of obviously the difficulty adjustment and the way that it can be used and the way that it can be more fluid, essentially, it could be really, really interesting to see what happens with it. And we've always seen the John McAfee predictions and obviously the Draper predictions of where it's going to go. I've always been quite conservative. I'm looking at like $8,000 of a Bitcoin and 80,000 being brilliant and being 10x from 8,000. That's amazing considering when I bought it. And you got to look at where can we go, and I do believe that every 4 years with the halvings and that stock to flow ratio, it is going to keep increasing in price. It doesn't matter in my opinion, if we cannot physically use it as a payment system, I don't give a shit. All the altcoins can do that. Nano can do that. XRP can do that. You know, random stuff like that where I want to buy something. Okay, cool, here we go. Bitcoin is going to be the store of value if this is what's going to happen in terms of the stock to flow ratio and the hardness of an asset comparing it to gold. It's massively important that you understand that absolute scarcity, the difficulty adjustment in Bitcoin for the mining processes is there, and it's fully decentralized. It works. Now, reservations. Let's talk about a few just before we get too bullish. Now, obviously, this is where it all came from. But I want to say one thing that isn't on here. A lot of people are getting quite a bit iffy with Bitcoin and obviously the miners. Where they are, they're obviously located in China. A lot of people are like, oh, it's going to cripple and crumble. And at the end of the day, I think it's very, very unlikely it's going to happen. Like, if they're ever going to do a 51% attack, the loot, in terms of the reward, based on the cost to get that, is not worth it. That's the biggest benefit we've got at the minute. Because it's such a big network, it's very secure. It will cost a lot of money, a lot of hash power, a lot of power to get anywhere close to getting a double spend on Bitcoin, which is interesting. Now, obviously, gold is probably more easier to steal. In reality, you just smash through a few brick walls and get them. But with Bitcoin, it's going to be a lot harder to get. So I know there's reservations from altcoin holders, and oh, it's slow, it doesn't really work. There's no use case. Use case doesn't matter in terms of spending. The use case is in value, is in the difficulty adjustment, the scarcity, the ability that it's a hard asset that will go up in price over time. We've only been around for 10 years, and we're already at 8,000. We've already been to 20,000. Oh, it's a Bitcoin crash. Every asset crashes. It's how they recover. We recovered. We went back up to 14k. We're back now at 8k. Where can we go from 8k? Well, who knows? We don't know yet. But halving is coming in April, May time next year. So if I was you, I would recommend massively that you buy the Bitcoin Standard and read about Bitcoin. It's not too late, you know.